Dirty dealings, corporate battles, consumer woes. This is Evening 5. Prime Minister Dato Sri Anwar Ibrahim and his Singapore counterpart Lawrence Wong formalised the deal establishing a special economic zone in Johor. In a joint press conference, the two leaders said both countries are also reopening discussions on long-standing issues such as water supply, maritime delimitation and airspace. According to a Bernama report, Anwar said such matters should not overshadow the positive bilateral relationship and that both sides should prioritise cooperation on fundamentals such as economics, energy, digital technologies, investments and trade. He said he and Wong have agreed that a meeting should be held on a quarterly basis to review the issues. Meanwhile, Wong expressed his confidence that the two nations will be able to work together to develop durable outcomes on all of these issues with a balance of benefits on both sides, citing the JS-SEZ and the Johor Bahru Singapore Rapid Transit System as examples of positive win-win projects. On the Kuala Lumpur-Singapore high-speed rail project, Anwar said it can be revived if there is full participation from the private sector with minimal state involvement. He said Putrajaya is waiting for promising proposals. KWAP and its affiliates have disposed of 119.25 million shares or a 7.15% stake in Malaysia airports, pursuant to the takeover offer by Gateway Development Alliance. According to MHB's filing with Bursa Malaysia, the shares were disposed of on January 6th at 11 ringgit apiece. GDA, comprising the EPF, Khazanah Nasional, the Abu Dhabi Investment Authority and BlackRock-backed Global Infrastructure Partners, has already held 70.1% in the airport's operator as at 5 p.m. on January 6th. With KWAP's disposal, this could mean GDA effectively holds over 77% of the total issued shares in MHB. KWAP's disposal came after the deadline for accepting a takeover offer by GDA, Pantai Panorama, Kuasa Aktif and GIB Aurea for the shares not already owned by the offerors had been extended to January 17th from January 8th. MIDF in a note today recommended that investors accept the 11 ringgit offer, which is an 18% premium over its fair value of 9 ringgit 32 sen and a 125% premium over the latest net asset per share of 4 ringgit 89 sen, with the stock currently valued at 7.1 times FY 2024 enterprise value over EBITDA. Science, Technology and Innovation Minister Chang Lee Kang said government analysis shows that over 30% of jobs in Malaysia will be affected by AI in the next 10 years, with key sectors such as manufacturing, services and IT expected to undergo significant transformation. According to Bernama, he said the statistics revealed that more than 600,000 workers must undergo reskilling training within 3 to 5 years to remain relevant in the increasingly competitive job market. Moreover, by 2030, the country is projected to require an additional 500,000 skilled workers to meet the demands of the technology and technical sectors. He said these figures highlight the urgent need to develop an effective training and certification ecosystem. Chang said Malaysia's workforce must be prepared to face these changes, as reskilling and upskilling processes become crucial, especially in technology and technical fields, so that Malaysia can remain competitive globally and meet growing industry demands. According to the minister, the government is actively ensuring that the courses and training offered are aligned with international standards and the needs of Industry 4.0. EA Technique Malaysia said it will get an undisclosed payoff as part of an amicable settlement with energy giant Petronas over the lease of a floating storage unit vessel. Vestigo Petroleum, which is owned by Petronas, will pay to settle a dispute over the lease of the FSU Nautica Moa vessel in April 2017. Details of the settlement were not provided, though EA Technique said the payoff is expected to enhance the company's cash flow and liquidity position. Its executive director, Datuk Mubarak Hussein Akhtar Hussein, said in a statement that Vestigo and EA Technique have both demonstrated shared commitment through this resolution and remain dedicated to fostering strong collaborative relationships. He noted that the resolution allows EA Technique to focus on its core business areas, including marine transportation, offshore storage and port marine services. Swift Haulage has announced plans to expand into cold chain logistics to diversify its revenue streams through a joint venture investment. The company signed a JV agreement with its major shareholder, Singapore-based JWD Asia Holding, to establish Swift Cold Chain, which will operate and manage a temperature-controlled warehouse and transport business. Under the agreement, Swift Haulage will hold 7.34 million shares, or a 51% stake in the JV, amounting to an investment of 7.34 million ringgit, while JWD will own the remaining 49% stake, equivalent to 7.06 million shares, with a 7.06 million ringgit investment. JWD owns a 20.48% direct stake in Swift Haulage. Swift Haulage aims to leverage JWD's expertise in logistics to provide reliable and cost-efficient temperature-controlled solutions in order to fast-track its entry into the cold chain logistics sector. The firm plans to fund its capital contribution through internally generated funds and/or bank borrowings. The JV is expected to contribute positively to future earnings.